during bear markets, the important thing to happen, and the reason that they take time, is there has to be a redistribution. So coins that go into certain, whether it's a trader or someone who doesn't really have a very high conviction, coins can bounce around between these. These are like the liquid supply, the supply that's always changing hands until eventually that coin finds a hodler who will take it off the market and put it into cold storage. They're the folks who are more price insensitive. And you can see a bunch of them up here. These coins still have a cost base of 50, 60,000. So these folks, I mean, we're now trading down, we've got down to 17.6, but we're trading down around 20,000. And these folks are still hanging on to their coins. Now, some of them may well capitulate, but some of them also just simply don't care. They are price insensitive. They actually do believe that Bitcoin has a much, much longer future ahead of it. So over time, these coins will eventually find new holders, those who will take them off the market. And what we can see is we form these kind of volume nodes. Now let's explore this from a few different angles. So the 2018 market in particular, I mentioned that we had the 6,000 floor. This is that first level before we lost it down to 3K. So coming off our all-time high, note how we get a filling out. This is the bear market, the 2018 bear, chopping around, forming. Look at all this volume that builds up at the 6K level. So let's watch this play through again. You'll see this is the bear market, right? People haven't quite worked out it is the bear yet. Now people are starting to realize, oh, 6,000 might be the low. Look at the accumulation. And then we lose it in November, and look at all of this volume that forms down here at 3K. That's what put the actual bottom in. So everyone thought that the bottom was in at 6,000. Turns out that it wasn't. And we saw that next leg of major accumulation. We saw a capitulation and accumulation at the same time. So now let's move to our current market. We have a similar structure. So we're coming down from the all-time high. Note how we start to build up a lot of, see all these coins moving in around the 30,000 level? It starts to build up both a 40,000 psychological level, 30,000 another level, and then down here at the 20K. We had this sell-off, but remember, this is fairly recent. We've only been down here for a few weeks, but you can see how much volume starts to pick up here. Now, the other thing I want you to note, where do these coins come from? Note that they generally come from the 30 to 40,000 realm. That's where a lot of these coins, when they come down here, you'll see these start to deteriorate. So what we're seeing is that redistribution from people who bought during the 2021 and the 22 cycle. They start redistributing their coins to new holders in significant volume. So again, this is very, very early in the piece. Doesn't mean that the bottom is in, but we're seeing that people are treating that 20,000 level much the same as the 3,000 level was back here in 2018.
Welcome, Bitcoin friends. It's Bitcoin Mamo. Today we're going to look at the Bitcoin charts, do some TA, look at various time frames, and we'll also take a look at market Cipher. So that intro video was provided by Glassnode on their YouTube channel, just titled Glassnode, and this is from their latest video. I thought this animation was very informative and quite useful to see in real time how coins change hands in a bear market. And it just shows the different levels where coins were last bought, and especially that comparison with the 2018 bear market, how there was big accumulation at 6K, and then we did have that final drop, and there was that redistribution down to 3K, and the similarities with our current bear market, where there was a lot of accumulation at 30K, and then redistribution back down to 20K. We did drop to 17.5K, but pretty much in that range. So I've just slowed down that animation just so you can see it a bit better, because it was quite quick in that previous video. But I thought that's something that if you didn't see the Glassnode video, that may be useful for yourselves. But let's get into the charts now. So let's start by looking at the US stock market. This is the S&P 500 futures chart on the weekly time frame, and we can see we have spent about 5 weeks in this range, going sideways pretty much in a range. We have tried to push back down in the last few weeks, but we have seen these wicks appear. We have been pushed back up higher on the closes. And we do have all these weekly order blocks drawn in blue here. This red order block is actually a monthly order block. We are seeing these areas act as support for the time being, but obviously there is a lot going on in the financial world. We did see inflation increase to 9.1% in the US, and we do have coming up the next decision by the Fed on the interest rates. For the time being on that inflation news, the stock market is still holding up quite well. Just looking at some other levels here, I've just got a fib retracement from the bottom of that stock market crash in 2020 to our peak, and just marked off that 382 level where we are at the moment, consolidating above. Now we could definitely go down further here. I'm not saying I know what can happen with the stock market. And get a better read on the Bitcoin charts. Just looking at the VPVR here, the amount of volume traded at certain price levels. You can see that there was a decent amount of volume further down here. So if we were to break down lower, we could possibly look for some support in these areas. And Bitcoin has been following the stock market quite closely, but it doesn't always have to follow the stock market. And I just want to pull up Bitcoin now to look at the 2018 bear market. I just have Bitcoin with this orange price chart here, overlapped with the S&P 500 futures chart, and just looking at the 2018 bear market here. What we can see is the stock market was actually making new all-time highs as Bitcoin was going down here. But just zooming in at that final capitulation where we dropped from 6K down to 3K, what we can see is Bitcoin actually bottomed here. This is again on the weekly time frame, and we see the stock market had one more big drop here. Well, Bitcoin did actually start going up and the bottom was in. So it doesn't have to always be correlated. Well, let's go on to Bitcoin now. This is the 2-week time frame. We do close this 2-week candle at the end of the week. And if we do close green, that'd be our first green 2-week candle in 16 weeks. We have also been talking about how there is this spike here on the VPVR around this level where we are getting some consolidation. This is around the previous all-time high of 2017. And it's hard to see on the 2-week time frame, but we did have some consolidation here as we initially first challenged that previous all-time high on the run-up in 2020. There is a chance that we have already bottomed, and 17.5K was the bottom. And we are also in this falling wedge pattern here in the darker white lines. We have 2 touches on the top, 2 on the bottom. Generally on the 3rd touch we break bullish. But we can see there's a lot of time here where we can fill out this space. We could possibly go all the way until September before breaking this trend line. In the shorter term here, we do have this dotted trend line, just connecting the 2 highs here. This would be the first trend line we need to get back above to increase the probability that this was the bottom. And again, it doesn't mean we go straight up. We could get a bounce, come back down, even form a double bottom before trying to challenge this overall trend line from this falling wedge. And onto the weekly time frame now. We can see that spike on the VPVR here on the weekly as well. There is quite a bit of volume here from obviously this previous price action and also our current price action. And we do see it is pretty comparable to this spike up here, depending on the settings you have on the VPVR, how big you make these block sizes. Obviously that will alter how these look. But we can see there is a lot of volume at this level, around 19.5K. And again, we can just zoom in that to show that level. We do have that spike here, and it is in line with this weekly order block from this red candle in an uptrend. These order blocks are areas of supply and demand. It's a break in the trend. So there was time spent here and volume. There were buyers and sellers here, and these levels become of interest later on. They can act as support or resistance levels. We do have another order block further down around 18.2 to 18.4K. We've only wicked into that order block once on that initial drop. Looking at our more immediate price action here, we have this order block from this green candle in a downtrend. And we can see on the previous week close, we did close inside this order block. So no clear direction. Currently with our weekly candle, we did go down to 18.9K. And we've been brought back up to around 20.9K. So we have to see how this weekly candle closes. If we can close above this order block, which would be above around 21,000, that would be more of a bullish sign that we might get a push up and try to challenge this white dotted trend line we spoke about. and maybe come up to this 200-week moving average, which is currently at 22.6k. We do have those interest rate announcements, so if the stock market gets a reaction, we might also see a reaction from Bitcoin. The total crypto market cap is still holding the 200-week moving average here, and we do have this blue box just showing this range of a previous consolidation at the start of 2021. And we could spend some time in this range as we do potentially bottom out and eventually look to break that falling wedge pattern and also get above this blue box. And now down to the daily time frame, got that same falling wedge pattern and the white dotted line. But just looking at our more immediate price action, it does seem like we are in a channel here. If we just connect these overall lows, and these are parallel lines, we can see it pretty much lines up with these two peaks. So for the time being, we are in this channel. And just looking back at the previous consolidation here at 30k, this was more of a rising wedge pattern than a channel. And we know this is more of a bearish pattern. We had two touches on the bottom, two on the top. That third touch on the bottom side generally breaks bearish. We had that drop back down. This consolidation that does look slightly different to the previous one. And again, this could also be viewed as a bear flag, but I do think we are quite close to the bottom. And obviously we need to break this white dotted trend line and also this channel pattern. Now just looking at our more immediate price action here, I have just got marked out a fib level, taking it from this high down to our low. And we have been coming back up here. And we do have a golden pocket area between 21.1k and 21.2k. So we could possibly see some resistance here. And there is actually also a CME Bitcoin futures gap at this level. And we can see that this is the futures chart here. And just zooming in, we can see we did make a gap here on the July 9th weekend. We can see we did wick down to this area, and then we did open lower down. So there is that gap here between 21,045 and 21,160. And this is where that golden pocket is on the futures chart, similar to the spot price chart. So we could possibly get some resistance there. We do also have the daily EMA ribbon, which did act as resistance here on this first attempt higher. We can see that's coming down quite close to that golden pocket area. And the bottom of this ribbon's at 21.5k. So we may get some resistance in this area. Back to the spot price chart now. We see a similar thing with that EMA ribbon. Did act as resistance on the first attempt, and at the moment we are trying to push into that ribbon again. I do have a key level on the RSI marked out here with this blue rectangle, and this is the 50 level. This is always important on an RSI. It can indicate a bearish price action as opposed to bullish price action above this level. And we can see we've come up into it several times here and gotten rejected. And each time we have been pushed down from that area just before this big drop. And also the second touch here just before this big drop. This is a key level to get above on the RSI. We can see we're coming up into that range. If we are able to get above it, use it as support, it would give confidence that perhaps we're going to break above this white dotted trend line and also possibly this channel as we come up more into that EMA ribbon. Just looking at order blocks on the daily time frame, we had one lower down here, which isn't relevant at the time being. We have two smaller order blocks, one from this green candle in a downtrend, this red candle in an uptrend. They haven't been quite as significant here. We haven't gotten resistance from them, but they are quite thin order blocks. To find any significant order blocks here, we would have to go to the 5-day time frame, this green candle in a downtrend. And again, we would have to look on the 5-day closes here for the relevance of this order block. We can see that the previous 5-day candle, after coming down here, didn't close below the order block. And our current 5-day candle is inside the order block. This candle just recently opened and it won't close until the 20th of July. But we can see we came above this order block, came down to test it as support. And if we can close back above this order block, which would be above 21.2k, then that would show confidence that this order block held as support, and perhaps we push a bit higher. We can also see it does line up with that golden pocket area. And if we do turn on the VPVR from this immediate price action, we can see we are above the main point of control here, and it actually starts dropping off here around 21.5k. But either way, we need to get above this white dotted trend line here that we've talked about, and we are getting close to that range. Over the next 5 or 6 days, we will probably interact with that level, and if we get resistance off that level and push back down, would be quite bearish. If we can break above, obviously that would be quite bullish. We may come back and test it for support before moving higher. This could give us a better read on the direction we may be heading. And let's keep up our comparison with the last 2 times we were at 20k area. Since we did just dip down into that area again, let's compare these previous price actions with our current price action. This is the 3-day chart on both sides. This is our current price action on the right. This is the end of the 2017 bull run where we topped out around 20k. And we've just got marked out the top of the bodies of these candles and also the top of the dead cat bounce. We can see with this recent drop down, we came down to 19k. We did dip again into the top of these bodies, and we did get a bounce from that area. So this area is still acting as support, the previous all-time high from 2017. Now we'll compare this area here at the end of 2020 as we started the bull run with our current price action. So on the left is that end of 2020. Just got marked out our range with the top of the bodies of these candles and the lows here. Again, the 3-day chart. Also this order block from this red candle in an uptrend. And this was when we were testing those all-time highs from the end of 2017. And we did get some resistance at that level. We can see a similar thing. We have gotten support, a pretty similar level to that all-time high, 19.1k here. And we see we've wicked down into it a few times, but it has also acted as support. We have tested this order block with a few wicks, but not with any of the candle bodies. We have also been watching this chart. This chart shows the hash ribbon indicator in the middle here, and just looking at the previous bear market, not the space in between, which is blacked out, as you can see what it looks like without blacking it out. And we also have market cipher down the bottom here on the 2-week time frame. So just to show that zoomed in, this is the 2014-15 bear market. This was the bottoming candle on the 2-week time frame. We saw the following 2-week candle gave the buy signal on the hash ribbon indicator, and then 4 weeks after that we got that major 2-week green dot on the market cipher. This is the 2018 bear market now. We can see this was the bottoming candle on the 2-week time frame. 4 weeks after that, we got the buy signal on hash ribbon indicator. And then 2 weeks after that, we got the 2-week major green dot on market cipher. So now our current bear market here, we can see that hash ribbon starting to give its initial flashing sign. And is this possibly the bottom where we came to 17.5k? And again, for me, I'm waiting for that buy signal on the hash ribbon indicator. It has been 4 weeks. We will open a new candle at the end of the week. So we're looking for that buy signal on the hash ribbon indicator and the major green dot on the 2-week time frame on market cipher. And me personally, I have been buying quite heavily over the past 6 weeks. I did dollar cost average ever since we were below 30k, buying a small amount every day. But I have done a lot of bulk buys as we have been around that 20k area. And for me, although I'm buying, I have friends interested in getting into Bitcoin. I'm waiting for these to confirm these 2 signals before I recommend for them to buy Bitcoin, because anything can happen and I'm happy to take that risk. But for other people, I want this confirmation first. So now just looking at market cipher, we've been watching this chart. Nothing much has changed here. We got the green dots from the 1-day time frame all the way down to the weekly time frame. These are the major green dots. These rows here go from the 1-day, 2-day, 3-day, 4-day, 5-day, 6-day, weekly, and 2-week time frame. And we're just waiting for that 2-week major green dot to give us that confirmation that the 17.5k is the bottom. And doesn't mean we can't go up and down still. I do think we could possibly come down and form a double bottom, possibly just sweep the low slightly and then come back up quickly, like we did in the 2014-15 bear market, where we did make that double bottom. Depending on what chart you look at, they do look slightly different, but we saw the bottom was in here. Those green dots built up. We got the 2-week green dot at this area, and we did still go sideways for quite a long time. It had one more drop back down. Some charts show this a lot lower, where it was more of a double bottom. But again, this will be a very good approximation and give me confidence that the bottom's in if we get that 2-week major green dot and the hash ribbon buy signal. 2018 bear market, we saw these green dots build up as we had that final capitulation. The bottom was in here, and then eventually we got that 2-week major green dot, and we still spent some time going sideways here before we started really taking off. But let's take a look at market cipher now. This is the 4-hour time frame. We can see we've had this bounce back to the upside. We are currently getting a red dot, but it's not confirmed yet. And we could also do something like this, where we did get these red dots, but we still went higher. So we need to look at the higher term time frames to give us a better idea. The 6-hour, we see this blue wave still coming up. So when the higher term time frames are still coming up here, well, the lower term time frames are getting those red dots. We can see something like this, where we get multiple dots and still spend time going higher, as we're getting support from those higher term time frames pushing us higher. The 12-hour is quite interesting here. We did get this green dot. It did get confirmed. So again, we see the higher term time frame momentum is still to the upside. The short term time frame is starting to get some red dots. So we may get some small pullbacks, but not a larger pullback. We also see this red money flow here is starting to curve back to the upside. It would be good to see this come back into the green. The last time we were in the green was way back in April when we were at 40k. We see we did start to come up here, but then we did get rejected and had one more big drop. So we do need to be cautious still. But again, what we looked at was this was more of a rising wedge pattern here. Well, this is more of a channel. And we are seeing the higher term time frames look like they are starting to bottom out. The daily time frame does have this green dot. It's not confirmed yet, but we are seeing this blue wave making higher lows here, which is a good sign. And also the money flow starting to come back up. And again, we want to see it come back up into the green. Last time we saw that, this red wave came back up. We crossed into the green, and we saw that we went from 40,000 to 48,000. So almost a 20% rise after we crossed into that green money flow. The 2-day time frame, some people were worried about this, as we did have this red dot here, and people were looking at the previous red dot after coming up from the green dot. And after we got that red dot, that's when we had that big drop back down. So we did get that red dot here. It did actually get confirmed, but we see we have gotten a green dot straight away here. And we'd have to wait for the daily close to come in for this 2-day candle to confirm the green dot. And the 3-day is quite similar. By the time we had that red dot on the 3-day, we had this big drop already. So that 2-day one did capture it quite well. But as we said, we do currently have that green dot, and if we stay at the levels we're at by the daily close, it most likely will get confirmed. So these two white lines here were where I marked those red dots on the 2-day time frame, and where we got that second red dot, and people were scared we might have another big drop from that. But the thing to notice is we're on the weekly time frame now. When we got that red dot on the 2-day time frame, the weekly didn't have that green dot yet. And we can see we did get that green dot already, a major green dot, and it has been confirmed. So it is different conditions when looking at the higher term time frames here. And so it's not the same comparison with that 2-day red dot, as we are getting that support from the higher term time frames. And again, we're just waiting for that 2-week major green dot now. We can see it seems to be getting close. This blue wave's coming down, starting to close off. We will open that new candle at the end of the week. So we'll have to see if that green dot appears, and then it would take another 2 weeks to confirm it. So I'll make a video early next week to give you an update on that 2-week green dot. So I think that's about all. Hope you enjoyed that analysis on Bitcoin Mamo. I'll see you next time. Bye.